Over the last several years, I spent around $40,000 into the QYLD ETF. So much so to the point of, as of right now, I currently own well over 2,000 shares of it across multiple of my portfolios. And just for some transparency, here's a few screenshots right here. Now in this video, we're going to go over QYLD, or the NASDAQ 100 Covered Call ETF, talk about what this ETF is, how it works, and if or if not, it's still a buying opportunity. Then towards the end of the video, I'm going to show you exactly how much I earn on a monthly basis from QYLD with all the shares that I currently own. Now, if you currently own QYLD or have ever thought about it, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, what in the world is QYLD, the NASDAQ 100 Covered Call ETF? Well, it's exactly that. It's a covered call ETF that buys a basket of holdings and sells covered calls to generate massive premium. It says right here on the Global X website, high income potential for QYLD. Seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. And the cool thing about writing covered calls is even if the market trades up, trades down, trades sideways, within a range, you can still make a ton of money from doing so. Also monthly distributions, QYLD has made monthly distributions 9 years in a row and running. Now correct me if I'm wrong, but QYLD was one of the first covered call ETFs that got really popular years ago, which is one of the main reasons why it probably came across my desk a while back. It then says efficient option execution. QYLD writes call options on the NASDAQ 100 index, saving investors the time and potential expense of doing so individually. So that's a good point. A lot of investors say, well, why would you buy into a covered call ETF like QYLD? Why not just buy the same holdings that they buy and sell covered calls on it? Well, not only would you need a ton of money to do so, but also, like they said, it saves time and is much easier to just pay an expense ratio and let them do it for you. Now, speaking of expense ratio, QYLD does have a 0.6% expense ratio, which is almost double that of JEPQ, which is definitely something to take into consideration. Now, as far as the holdings in QYLD, as we see as of right now, there is the NASDAQ call option overlay, but on top of that, some of the top holdings are things like Apple, Microsoft, Amazon, Broadcom, Meta, etc., etc. So by buying into QYLD, you will not only have exposure to some of the top companies in the world, but also you're going to have that option overlay, which is going to help with not only premium and distributions and dividends, but also help during times of volatility. QYLD ETF at one time was all the hype in the dividend/income investing community. This is because early on it seemed to promise steady, consistent returns from its sort of conservative covered call strategy, with also distributing massive dividends to cash-hungry investors like myself on a monthly basis. But over time, as the future would show, QYLD might not have been exactly all it was cracked up to be. So before you say, well, it sounds pretty good so far, what else does QYLD have to offer? Well, unfortunately, it's not all sunshines and rainbows. QYLD is actually down on the max time frame, 32.45% as far as ETF price return. Now, believe it or not, a while back, QYLD was trading in the mid-20s, which as of right now is trading at around $17 per share. Now, the reason why a lot of these covered call ETFs decay is because of the covered call overlay. When the market moves up quickly within a given time frame, the covered call overlay is going to basically cap the potential upside. But as far as times of market volatility, although that option overlay is going to help with market volatility, it depends on how volatile the market is. And as you can see, a lot of times can cause some massive decay. So one of the negatives of QYLD is definitely the fact that the price has decayed pretty aggressively over time. But now on a positive note, looking at the dividend yield for QYLD, it has almost a 12% trailing 12-month dividend. Now looking at every single dividend that QYLD has paid historically, over time the dividends have been all over the place. Some months being as low as 10 cents per share per month, and then some months being as high as over 20 cents, 25 cents per share per month. But as of recently, over the last year or so, they've been pretty consistent at around 16 to 18 cents, which once again isn't all that bad. It gives us around a 10 to 12% yield. Now that being said, some of the covered call ETF fans always argue that even if there is some share price erosion, like we showed you a second ago, even if an ETF like QYLD is down over 30% as far as ETF price, the dividends are going to make up for it because these covered call ETFs do, in fact, which to be fair, they pay a lot higher dividends than the average stocks or ETFs out there. So the idea is that even if the ETF price loses some value, the dividends are going to make up for it and then some, which should give an investor hopefully a total return, which makes it much worthwhile to invest into. Now, before we go into my portfolio and I show you some of my monthly distributions from QYLD and we add up exactly how much I make on a monthly basis, I thought it would be helpful to show everyone how much they would have if they invested $10,000 into QYLD and reinvested dividends all the way throughout the 10 years that this ETF more or less has been available. So a $10,000 investment into QYLD with a starting share price of around $25.04, which now is at $17.13. Now that $10,000 investment over a 10-year time frame would have left an investor with around $18,820, or an average annual total return of around 6.48%. Now, although 6.48% isn't honestly a horrible return, considering also a lot of investors buy into something like QYLD because they want the income now. They want to even maybe use the dividends to retire off of. But let's be real here, there has been a lot of other investments throughout the market that have gotten investors a much larger return than this. Now, because I do own shares of QYLD throughout multiple of my portfolios, this is just one portfolio right here. But as you can see here on a monthly basis, in this portfolio alone, I earn anywhere from around $130 to around $145 on a monthly basis from QYLD. At least is what I've earned in 2023. But if we were to go through my master portfolio, which shows more or less all the different stocks and ETFs that I hold throughout all my portfolios, and if we were to go right here by QYLD, I currently have somewhere of around 2,715 shares of it, which also, side note, this dividend tracker is available to you guys. It's the first link down below in the description. But just from QYLD alone as of right now, I'm earning around $470 on a monthly basis from all my shares, or around $5,600 per year in dividends. Now lastly, is QYLD, the NASDAQ 100 covered call ETF, still a buying opportunity like it was, at least to me, back in the day? For me personally, because I already own so many shares of QYLD across my portfolios, I'm most likely going to just sit on my shares that I have right now, let them pay me monthly, and then invest that money into other different stocks or ETFs. Now, that being said, I do think that there might be some potential buying opportunities for QYLD, especially for an investor that wants to drip the dividends and basically offset some of that decay long term. But honestly, in a market where there's other high quality covered call ETFs, something like JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, which has performed very well over the last year and hasn't decayed nearly as much as QYLD on the max time frame, I personally would rather buy some shares of JEPQ than QYLD at this point. But when it comes to QYLD, the NASDAQ 100 covered call ETF, I want to hear from you guys down below. Do you currently own any shares of QYLD across your portfolios? And if you do, how many shares do you have as of right now? If you guys enjoyed this video, make sure to please drop a like down below and subscribe for more. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.